Hey, it is Friday, May 24th. This is the weekly market update. And stating the obvious, but everybody knows the last couple of months have been pretty painful. I want to give you a quick recap of where the rates have been the last 2 months. And then I want to share some market data with you that you can help incorporate into your conversations with buyers and sellers. Because the single biggest issue that realtors are having right now is that buyers and sellers have no urgency to do anything. So I want to help eliminate that, create some urgency, and most of all, give buyers and sellers the clarity that they are desperate for right now. Because we're looking at the markets. If you've been in this industry for more than 5 years, you know what the turmoil feels like and how to address those changes, how do I identify and deal with them. But to the average home buyer and seller, everything that we see is magnified 1,000 times, and it can create some overwhelm. So giving them the clarity that they need will go a long way, and it'll actually help you identify which of those buyers and sellers are really serious about taking action right now. So looking back on February 27th, we had finally closed below 6%, 5.99%. I was so happy. I was talking with some of my coworkers about it, and we're like, finally, we've been waiting 3 years for this to happen, and here we are. 2 days later, Iran war kicks off, and everything goes to shit. Uh, Oil prices are spiking. The global markets are just in absolute turmoil, and it felt like every single day we were watching interest rates slowly tick up day by day for weeks. On March 27th, they hit a peak of 6.64%. Shortly after that, the peace talks had started, the ceasefires had started, and we were starting to see some pullback. So today, the national average on a 30-year fixed rate is right around 6.32%. Things are moving in the right direction. However, there's still no solution to the major problem with what's been happening in the Middle East. There are some peace talks that could happen this weekend. Don't know for sure. Don't know what the outcome is going to be. So there's still a lot of uncertainty. But what we know for sure is that in March, 18% of the homes sold in the U.S. sold over list price. That means that the 82% that sold at or below list price, most of those probably had a seller credit built in there somewhere for closing costs or to buy the rate down or a combination of both. And this is the information that buyers and sellers need to be aware of. So can you wait until the interest rates come down? Sure. That's going to lead to a point where, again, if you've been in the industry long enough, you've seen this happen before. When rates come down or they dip low enough, a lot of activity, a lot of buyers out there. We're seeing multiple offers, price escalation. And when that starts to happen, all those seller credits instantly evaporate. So you could wait more if you want to pay, or you could wait till the rates come down if you are willing to pay more for the home without that seller credit to potentially buy your rate down or cover closing costs. Or if it's still comfortable for you, even at the higher rate, the payment's still manageable, you still love the home, you still love the area, make a move now. Again, refinance later when rates do eventually come down. So I think it's going to be a busy weekend just based on the weather forecast. Those are my thoughts. I could be wrong, but I think it's going to be a busy weekend. So I put together a slide on this. I'll share this with you real quick here. So right there. So if you would like me to send you a copy of that, I can text it to you. Just text me back info, and I will send that right over. But until I talk to you again, have a fantastic weekend, get some sunshine, and we'll talk soon.